Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the key highlights and the top market events that are expected to be causing big moves in prices this week. So we'll take a quick overview of the entire economic calendar, try to understand what might be moving various markets from Monday through to Friday. And once we do this, we'll also be looking at the top events for the day and what is expected to be moving markets today. Then, after we are done with that, we'll be doing some technical analysis, trying to understand what are the prevailing market patterns. And once we do this, hopefully everyone will trade from an informed perspective. So as usual, this session does not constitute investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's jump straight into the economic calendar and try to understand what are the top events. And once we do this, hopefully we'll know what are the key movers today. So Penda, give me a sec. I need to share this update with some people. So just a second. All right, I think I'm done with that. So let's get started. Good morning and hello, Paul Kerry. Thank you for being the first to join and comment. You can see Kevin's journal in the house, Smith FX, Emanuela Digo, Matilda Katheu, and Joshua Dongo, Daniel Kingori. Good morning, everyone. Thanks, guys, for joining. And of course, feel free to share the live video with other traders so that they can also join and benefit from the session. So from the economic calendar perspective, we know that Monday is usually a slow day. But then if you've been following news and key highlights, trending topics over the weekend, we know that there has been a major escalation between Israel and Iran. So a lot of missiles have been thrown to and fro, some landing in Tehran, others are landing in Tel Aviv. And a lot of traders have been concerned. How is this expected to be moving the markets? And of course, some of us expected some damn big gaps at the market open, though that did not play out as expected. So we'll be covering that later in the presentation. So this morning, we had a sequence of data from China ranging from new home prices, which were down negative 0.22%, meaning that home prices are contracting. So overall, the Chinese economy is going through some form of deflation, and this is in overall strengthening their currency, while the Chinese People's Bank of China has been really trying to stimulate the economy by injecting new money, trying to push for more or expanded growth. So industrial production year over year was at 5.8%, weakening from 6.1% in the prior reading, whereas retail sales had a jump to 6.4%. So clearly one positive news for the Chinese economy. Retail sales were on the rise to 6.4%, up from 5.1% in the prior month. Then fixed asset investment was down to 3.7%, down from 4.0% in the prior month. So clearly weakening in this case. So the unemployment rate slightly improved to 5.0%, down from 5.1%. So clearly showing that jobs are improving, retail sales are improving, whereas industrial production and home prices are not moving in the right direction. So we'll be looking at the market reaction after that. But then for the rest of the day, I don't think we have any major news. We have, yes, the producer price index for Switzerland This should have been out earlier. Yes, the PPI came in at negative 0.5%. These are key important data points to observe that producer prices are moving further back downwards, which basically has already entered into what we would describe as a deflation territory. If you look at the prior months, they were mostly in the positive, but now we are looking at a negative 0.5% number. This is indicative of future inflation turning into deflation. And of course, we'll be expecting an interest rate decision by the Swiss National Bank later in the week. So there will be a speech by German Buba President Nagel. This will be at 10 a.m. I think it has already happened. And of course, later in the day, we have housing stats from Canada and Empire State Manufacturing Index from the US at 3:30 p.m. So these are not major or high impact news. So the prevailing market movers will be the conditions that we are seeing happening in the Middle East, that is mainly between Israel and Iran. So any updates from US President Trump might also be moving the markets. Remember, this is a high tension environment, so news might be coming at any given time in form of either a tweet, an interview, or anything of that sort. So that will be our main focus for the day. So outside of that, looking at the rest of the week, we'll be starting tomorrow early in the morning by focusing on the interest rate decision by the Bank of Japan. In this case, we don't expect a change. So we expect the Bank of Japan to hold its interest rate steady at 0.5%, same as the previous decision. On the other hand, after the interest rate decision, we'll be focusing on the Bank of Japan press conference. That is usually a few minutes after the announcement. The press conference clarifies the monetary policy decision. Of course, there is journalists raising questions, so this will clear a path on how many rate hikes to expect for the rest of the year. So this is expected to be high impact news for the JPY as well as the Nikkei 225 index. So clearly, it will be a big move, and we should be seeing much more volatility coming into the market on Tuesday morning. So later on, we'll be looking at the core retail sales from the US. In this case, for retail sales overhead, I'm expecting a big drop to negative 0.6%. That is in the month of in the month of May, down from 0.1% in April. So for core retail sales, a slight uptick of 0.2% compared to 0.1% in the previous reading. So remember, retail sales tend to correlate positively with the currency. So if we happen to see retail sales jumping higher, then that should be positive for the dollar. But then from the indications and the expectation we are seeing here, if it's a drop of negative 0.6% or even further downwards, then that should be weakening for the US dollar. So fast forward to Wednesday, we'll be looking at the inflation report from the UK, where we're expecting inflation to have slowed down from 3.5% down to 3.3%, whereas the core inflation is expected to have slowed down from 3.8% down to 3.5%. Retail price index from 4.5% down to 4.2%. Of course, if inflation is moving further downwards, then this discourages the Bank of England from continuing to cut rates, and as a result, encourages the Bank of England to continue cutting rates if inflation is moving further back downwards. In that case, weakening for the pound. On the other hand, a bigger number than expected would likely strengthen the pound. So unemployment claims is a weekly data point from the US. We're expecting around 248K. That was the prior reading. So we'll be watching that closely. Then there will be a speech from Bank of Canada Governor Macklem. This will be during a key event scheduled on Wednesday at 6:15 p.m. So he'll be doing the text of the speech, which is due at the release time listed. So the speech is scheduled for delivery 15 minutes later, and this is about Canada's economic outlook, inflation trends, and interest rates at the St. John's Board of Trade in Newfoundland and Labrador. So of course there will be audience questions expected. Whenever there is audience questions, then you know that this has the potential to be explosive and move the Canadian dollar. So this is a key event to be following for the week. Then we look at the federal funds rate. This is where the FOMC, or the Federal Open Market Committee of the US, will be airing their rate decision at 9 p.m. on Wednesday. In this case, we are expecting an overall hold. In this case, we don't expect the US to be cutting rates. We expect them to be maintaining between 4.25% and 4.50%. So they'll be sharing the economic projections, or what we call the dot plot, and then the FOMC statement before doing a press conference 30 minutes later at 9:30 p.m. on Wednesday. So this will be a key mover of the US dollar as well as US equity indices. So we should be following these as the main highlight event for the week. So if you are a fan of trading gold, silver, oil, US dollar pairs, as well as US equity indices, the SP 500, the Dow, the Nasdaq, the Russell, all of them are expected to have increased volatility after the rate decision on Wednesday at 9 p.m. So from what we are seeing, especially from interest rate traders, you'll notice that there is a 96.7% probability that the Fed will be holding rates at between 4.25% and 4.50%. So if they announce as expected, we don't expect much of a movement. But then the press conference that follows later, which will have audience questions, and we'll be closely following how Jerome Powell responds to those questions. Then that will be the expected key market mover. So outside of that, we know that the US will be having a public holiday on Thursday. I believe this should be Juneteenth. So US banks will be closed in observance of Juneteenth, National Independence Day. This should be on June 19. So nothing much is expected. New Zealand will also be having a similar holiday, in this case in observance of Matariki Day. So in this case, also their banks will be closed. But then there will be more activity from other economies, ranging from the GDP data from New Zealand early in the morning on Thursday. Here we're expecting a 0.7% increase in Q1. So then we'll be also looking at the employment change as well as the unemployment rate in Australia. We're expecting that the Australian economy created 19.9k jobs in the month of May. So this is a big slowdown from 89k in the previous reading, whereas the unemployment rate is expected to have remained at the same level. So we'll also be looking at the Swiss National Bank Financial Stability Report. This is usually to gauge the financial stability of the banking sector in Switzerland. So if there's not much change, we don't expect much movement. But then if there's a big change, then this can cause some big movements in the Swiss franc. So the Swiss National Bank will also be sharing the monetary policy assessment as well as an interest rate decision, where in this case, we're expecting a 25 basis point rate cut from 0.25% to 0.0%. So in this case, the Swiss National Bank is expected to return policy interest rates down to 0%. And this will be a very interesting data point because we have seen the SNB holding rates below 0% at some point in the past. So the last time we saw interest rates below 0%, this was in June 2022. So notice how there was a very short-term rally all the way to, I believe this was 1.75%, and then all the way back down, and now we're expecting interest rates back to 0%. So if we try and stretch this, you'll notice that for the longest period, what we had been seeing here, trying to pull this one. So even in 2019, 2020, interest rates were at a negative 0.75%. So for the Swiss National Bank, it has mainly been holding rates at a negative level. Only that after COVID, they had to hike rates for a while in order to get inflation back to target. And now that inflation has really dropped and is now risking getting into the deflation territory, now the Swiss National Bank is looking to cut rates back to zero. So in this case, we should be expecting to see the Swiss franc weakening along the week before the eventual announcement on Thursday at around 10:30 a.m. So there will be a press conference at 11 a.m. Of course, that will clarify oncoming monetary policy. Then we get one more central bank making an interest rate decision. and in this case, it will be the Bank of England. So we're expecting the same kind of voting, a change in the kind of voting, where in the last rate decision, there was an interest rate cut from 4.5% to 4.25%. That was a 25 basis point rate cut. But then in this case, we're expecting the Bank of England to hold the interest rate steady at 4.25%. So the change in voting will be in the previous reading, 7 members voted for a cut, and 2 members had voted for a hold. In this case, we're expecting 7 members voting for a hold and 2 members voting for a cut. So in this case, there is an expectation that the Bank of England is looking to hold rates a little bit longer before they continue cutting. So, of course, in this case, we'll be closely following the monetary policy summary to see if there's indications of further rate cuts later in the year that would weaken the pound. But then if they're considering holding rates a little bit higher for longer, then that should be strengthening for the pound. So the last central bank to make an interest rate decision this week could be the Chinese People's Bank of China. We don't expect a change in the rates. So for the 1-year loan prime rate, we expect them to hold at 3%. Whereas for the 5-year loan prime rate, we expect them to be holding at 3.5%. So China is currently facing some form of deflation. So in this case, more of monetary stimulus is what will be expected. And if there is any form of an addition to monetary stimulus, then that should be very positive for Chinese equities, but negative for the Chinese yuan. So national core CPI in Japan, data will be released at 2:30 a.m. on Friday. In this case, we're expecting inflation to have accelerated to 3.6%, up from 3.5% in the prior reading. So we'll be looking at retail sales from the UK, where we're expecting a negative 0.5% drop in the prior month compared to a 1.2% increase in the previous month. So in this case, a weakening in retail sales would likely weaken the pound, and of course, strengthening would likely strengthen the pound. So after the rate decision by the Bank of Japan, we will be having a speech from Bank of Japan Governor Ueda. This will be at 9:40 a.m. on Friday. And then core retail sales from Canada at 3:30 p.m. on Friday. Retail sales also at the same time. In this case, we're expecting retail sales and core retail sales to have a mixed outcome. In this case, retail sales reducing from 0.8% to 0.5%, whereas core retail sales, which were reducing at negative 0.7%, to slightly improve to negative 0.2%, but still a reduction. So those are the key highlights for the week. And of course, Philadelphia Fed Manufacturing Index, this will be at 3:30 p.m. on Friday. So quite a busy week, a lot of central banks making interest rate decision. So we expect a lot of increased volatility in the markets. So what else should we be focusing on in the markets today? So, well, if you look at the currencies market, especially the major currencies, then you know pretty well that the New Zealand dollar has been the best performing currency this morning, together with the Australian dollar. The euro has been slightly up together with the pound, whereas the yen and the Swiss franc have been the ones losing mostly to the dollar. So the dollar has largely been losing. Remember, if you look at the dollar index basket, we are basically looking at the basket of currencies that are used to estimate the value of the dollar. And so far, since the day started, the dollar has been weakening, mainly because some of the currencies holding the strongest weight, like the euro and the pound, have been gaining against the dollar. So clearly, the dollar has been moving downwards. So if you look at the, I would say, month to date, since the month started, today being the 16th of June, the dollar and the yen have been the weakest currencies, whereas the euro, the Canadian dollar, Australian dollar, New Zealand dollar, Swiss franc, and the pound have all gained at least 1% against the US dollar. So clearly, the US dollar and the yen have not been performing particularly well, whereas the Asian currencies, Australian dollar, New Zealand dollar, have been pretty good, and I hope that they continue performing the same way. So year-to-date performance, I would say Bitcoin has been one of the biggest gainers against the dollar, having gained by 14.54%. And this is among currencies. Of course, other assets have done better against the dollar, such as gold and silver. So the Australian dollar is up 5% against the US dollar. New Zealand dollar is up 7.78% against the dollar, whereas the biggest gainer is the euro, which is up 11.82% against the US dollar. So looking at other currencies, in this case, we have the Swiss franc, which has gained by 10.52% against the US dollar. So notice here it's negative because the first currency is USD. So these are Euro USD, New Zealand USD, Audi USD, and so on. But then if you start with the USD CHF, so this is the performance of $1 against the Swiss franc. So in this case, the dollar has lost 10.52% against the Swiss franc. So other currencies, notice how the pound USD has gained 8.56%. So the pound has been pretty strong against the US dollar, whereas the dollar has also been losing to the Canadian dollar, having lost by 5.61%. So clearly, since the year started, the dollar has been the weakest currency. And of course, now we'll be focusing on stronger currencies to trade against the dollar, and unless something changes fundamentally. So among the key highlights this morning, the recent stock market rally hit a pause as an Israeli airstrike on Iran sent oil prices higher and equities lower to end the first full trading week of June. So for the week, the SP 500 fell 0.6%. This is last week. The Nasdaq Composite was down 1%, and the Dow Jones Industrial Average was down 1.3%. So since this escalation started last week on Friday, we have had consecutive strikes between Iran and Israel, and this has escalated what looked like a conflict now into a full-blown war. And with this happening, then investors are trying to understand how the markets will react. And some of the key expectations is that gold will rally, but from what we saw this morning is that gold has been dropping since the market opened. Hopefully, we'll be seeing a change in direction. So oil prices were expected to be rallying, but remember last week they were very strong and making big moves upwards. So now we are seeing oil taking a breather, but perhaps at some point, we should be expecting to see the oil rebound and start continuing the bullish momentum. So in the week ahead, investors will have a close eye on rising tensions in the Middle East, particularly Iran's response. In scheduled events, the Federal Reserve's latest policy statement is set for release on Wednesday. The latest summary for economic projections, including its dot plot, which maps out policymakers' expectations for where interest rates could be headed in the future, will also be released at 2 p.m. Eastern Time, followed by a press conference from the Fed Chair Jerome Powell. So outside of that, oil risks. On Friday, Brent crude oil futures surged higher to just below $74 a barrel, while West Texas Intermediate futures, or the WTI, changed hands at almost $73 as investors digested the Israeli missile launch on Iran. So both measures were up 12% or more on the week. So last week was a pretty strong market for Brent crude oil. So the growing concern is that further escalation could push oil even higher and eventually weigh on inflation. JP Morgan head of global commodities research, Natasha Kaneva, wrote in a June 12 note to clients that should escalations of the conflict become severe, oil could rise to about 120 per barrel and push the consumer price index up to 5%. The latest data from the Bureau of Labor Statistics in the US showed that prices increased by 2.4% in May. So this is a key concern that investors are worried about. And some of the key things to think about are, on one side, an escalation between Israel and Iran would likely lead to either of the countries targeting each other's oil infrastructure. So Iran is a major producer of oil, producing around 3% of global oil, and they supply a majority of their oil to China. So if their oil infrastructure is struck by Israel, that would be a key disruption in the oil supply in the market. And of course, if you disrupt the supply, most likely you end up with higher oil prices. So that's a key challenge that markets are trying to understand and how this could impact prices. So the other thing is that during the escalation, Iran has made a threat, and the threat is to basically close what we call the Strait of Hormuz. So the Strait of Hormuz is an area that appears on the, I would say, on the Gulf Sea, somewhere between the Persian Gulf and the Gulf of Oman. So sorry, this is the Arabian Sea, not the Gulf Sea. So from the Arabian Sea, you'll notice that there is quite a good number of oil-producing countries, ranging from Oman, UAE, Saudi Arabia, Kuwait, Bahrain, Qatar, and of course on this other side we have Iran. So a good number of oil that is traded globally happens to pass through these Strait of Hormuz. So the strait is the small constricted area here on this border between Iran and, in this case, Oman. So if Iran happens to cross this area, and by crossing it means that there will be no ships that will be crossing this area, then this has the potential to disrupt about 20% of global oil trade. So about 20% of global oil trade basically passes through this small area here. So if Iran was to stay true to its promise and happen to decide that no ship is passing through there, then it could cause a lot of ships to be redirected to other means of delivery, delay delivery times, and of course add a premium on oil price. So that's a big risk that you need to be concerned about. So as you follow on the updates of the conflict between Israel and Iran, if this happens to be a case and it's implemented, then the overall outcome is higher oil prices. So that's the one thing you need to be concerned about this week. So on other highlights as of this morning, China retail sales growth at 15-month high. So China's retail sales increased by 6.4% year over year in May, accelerating from 5.1% in April and beating forecasts of 5%. It was the strongest growth since December 2023, boosted by increased holiday spending during Labor Day and the Dragon Boat Festival, alongside Beijing's efforts to cushion the impact of US tariff pressures. Meanwhile, industrial production rose 5.8%, the least in 6 months. So clearly, China is having some success in trying to convert its economy into a consumer economy. So Brent crimes further on Israel-Iran conflict. We'll be watching that later in the technical analysis. European stocks kick off the week higher. Of course, we saw that there was a lot of concerns over the weekend on whether European countries as well as the US would be joining in the conflict between US and Iran. So most of these countries have refrained from joining the war, and as a result, we have seen a positive optimism in their equities. So TTF prices rise over a 10-week high. So in this case, natural gas futures are moving higher, is quite a concern. India wholesale inflation falls more than expected. In this case, eased to 0.39%, indicating some approach towards deflation. So Norway trade surplus narrows in May. So Norway's trade balance, trade surplus narrowed to 46.1 billion NOK in May 2025, down from 52.3 in the same month last year, compared to the same month last year, as exports declined more than imports. So lastly, gold holds near record highs, though it has been falling this morning. So of course, we all expected gold to make a strong rally as investors fed for safe haven. That hasn't happened yet. So of course, as it keeps on moving lower, then it presents opportunities to buy at even lower prices. So outside of that, a quick check on commodities. A majority of them seem to be doing on the negative side, from crude oil, Brent oil, to gasoline, heating oil, gold, as well as wheat. They seem to be moving really bad, down bad, whereas other commodities such as copper on the positive side. Silver is slightly green, meaning it's moving higher. Soybeans a little bit higher, whereas the biggest gainer seems to be natural gas, which is up 2.84%. So those are the key highlights for the day. So I believe now we can jump straight and try to do some technical analysis. In this case, trying to understand where the market might be headed next after this. So let's begin with the dollar index. I'm expecting that you guys can see my screen. So I'm loading the dollar index chart. So the dollar index seems to be quite suspicious as of this morning. So having opened with a bullish momentum, notice how since the market opened, at first we had a big jump and then continued moving higher. So that was during the Sydney session. But then looking at the Tokyo session and now getting into the London session, it seems like the dollar is continuing being weak. So with a weak dollar, this has had a substantial impact on other currencies. Of course, if you look at the majors, for instance, the UK pound opened with a slight gap towards the lower side, covered the gap and kept going higher. And now we are looking at a session high that was made in the New York session on Friday. Market is currently retesting that area and could potentially break above that area. So from the 1 hour time frame, this is how it looks like. So clearly a market that is facing any sell-off pressure with more buyers coming in and pushing prices higher. So given the price action we are seeing here, so I wouldn't be overly aggressive looking at the Friday's high, but then in the short run, I would expect that at least this market would be retesting the New York session high. The New York session high on Friday was this. So today on Monday is likely around this area here. So this is on the back of a weaker dollar. So look at Euro USD. It's already beaten the session high that we saw on the New York session on Friday. So now we are looking at the Friday's high. And given the strong bullish momentum we are seeing here, it's more likely that the market completes the journey and gets to 1.16168. Sorry, 16148. So for the Australian dollar, as we have seen, the Asian pairs seem to be the strongest as of this morning. So clearly making very strong rejection of lower prices. So anytime we have seen the market retesting this area here, and this is within the span of the last 2 days, we have seen buyers come in and push the prices back up. So now we'll be looking at a retest of the New York session high on Friday. And if the market happens to breach that, then the idea is to be going for this strong resistance here. And there seems to be pretty good number of times that the market has been retesting this area here. So good chance that we see the market extending the rally to 0.65316. So USD JPY is one of the biggest movers and most volatile pairs since the year started. But then from what we are seeing on most recent price action, it seems like this volatility is dying. So we are no longer seeing a strong unidirectional movements. Let's say the market is strongly moving in one direction. So now it's more of a sideways momentum, which indicates some form of consolidation. So if you look at the 1 hour time frame, yes, last week we had a big sell-off all the way down. But then on Friday, there was a big jump. And now I would say that it's within reason to expect the dollar was weakening. Now we have seen the dollar gaining some ground against the yen. And then if you are looking for areas where the yen might start strengthening against the dollar, then perhaps you can look at previous areas where the market found some liquidity. So in this case, if this happens to be the case, and the dollar is still pretty weak today, being a Monday, then good chance that we see some market pullback. I wouldn't be overly aggressive to extend all the way back to the trend line, but at least days low or some session highs over last week's Friday. So good chance that we see this was the session low, then potentially much lower. In this case, some previous lows that were instrumental in the last couple of days. So we saw some liquidities coming in here, here and here. So good chance. You see 143.446. So gold, on the other hand, has been on a very strong bullish momentum. So it would be a mistake to be looking to short gold. It makes more sense to be looking for bullish opportunities. So we had a breakout outside this channel. So we know that we really struggled with this channel, knowing that gold is bullish, but it kept moving lower, forming lower highs as well as lower lows until it broke towards the upper side. So in the last 2 weeks after breaking, pulled back, retested the trend line, and then made a strong rally, broke the previous high and moved even higher, and then got to a key level target here. So the key level target was 34.37. But then after getting to 34.37, it really struggled to break. That was over the course of Friday last week. And then today it opens with a gap, attempts to move all the way up, but then pulls all the way back downwards. So this is indicative of a market that is strongly bullish, but then so far we are seeing some weaknesses, which implies that we should be looking for still bullish opportunities, but then within these zones here. This was a session low on the London session last week on Friday, and now you can see the market dipping its hands right back to it. So if we happen to see buyers coming in from this area here, then our idea still plays out of a bullish momentum from gold, but then it's a wait and see kind of scenario. It hasn't played out. So we wait and see what plays out around this area here. And if there's a good evidence of buyers coming in, remember it's the safe haven trade, given that there will be extended risks if there's some form of escalation between Israel and Iran. Then in this case, bullish trade on gold would play out. So from the daily time frame, we know there was a break towards the upper side. So here, with this kind of break, pullback continuation, we haven't completed the cycle. So the cycle usually is like this. So if the market is in a channel moving downwards, the overall trend is bullish. If it breaks towards the upper side, you expect some form of pullback, retest, and then a continuation that extends all the way to the top of the channel. So the top of the channel is the highest price we have ever seen in gold, 3,500. So we haven't retested 3,500. So even though the week has started with some bearish momentum, there seems to be some form of patience and buyers are still looking to get in. So if you got in early in the morning, expecting a very strong rally, and you didn't make money in the market pullback, kindly be patient. Good chance that buyers are coming in. You can already see from the 15 minutes candlesticks, there seems to be some activity playing out here. And if we see one more green candlestick moving higher, then perhaps that will be confirmation that we are moving back up. So for Brent oil, this was our prevailing market pattern. So it's a market that was literally just moving further downwards. So for the better part of the year, oil prices have been moving lower. We know that the OPEC has been expanding production. So we saw a low here in the month of May around $58.3 per barrel. And then eventually we had this resistance line. So the market kept testing this resistance line over and over and over again, failing to break each time. And then 2 weeks ago, it managed to break slightly, went back, and then towards the end of the week, managed to cross higher. So last week, it picked up the pace, went to our target, which was the top of the pattern here, and then it broke all the way up and made a very strong rally, hitting a high of $76.878 per barrel, which was a 2-month high, and this was very much appreciated. But then, from a technical trader's perspective, we know it falls on an upper trend line. So immediately after hitting that upper trend line, there was an immediate sell-off. Remember, the OPEC are still expanding production. So this morning, with the expectation that the spread of the escalation between Israel and Iran would drive prices higher, we saw the market opening with a gap. So market opened with a gap here, attempted to move higher, but only got as high as very close to Friday's high, but then immediately moved back downwards. So from the 15-minute chart, notice that immediately after that, the market went all the way down, crossed the gap successfully, traded sideways through the Tokyo session. And now as we get into London, we are seeing oil prices moving further back downwards. So clearly, we have mentioned 2 risks in oil. On one side, if more and more oil infrastructure is hit between Israel and Iran, especially on the Iran side, then that disrupts supply and it builds a very strong case for bullish momentum in oil. So in that case, we expect some form of bullish momentum. However, that hasn't played out yet. So we are only seeing some temporary pullback here. And also keep it in mind that we have a Friday open gap. So between the close of the price of the market on Thursday last week and the open on Friday, there was some form of gap. So it wouldn't be very surprising if the market was to cross this gap before bouncing higher. However, given the situation and how potent it is as of right now, we could be seeing increased volatility. And with increased volatility, it means that a very sharp drop in oil, followed by a very strong rally, could also be in play. So I could be wrong about this. The idea is, if this happens to play out and we see a sharp drop to this area closing this gap, then it could be setting up a trade that extends the bullish rally perhaps above the trend line, and now we start seeing oil moving towards the upper side. So remember, the bearish momentum have been playing for a long time, and now the bullish case is based on a very complex case of negotiations between Iran and Israel, and that hasn't played out. So all we are seeing is escalation. And of course, if they happen to resolve and let's say agree on a ceasefire, then all the gains we have seen since last week could be erased within a very short period of time. So the real trade is a short trade if there's some form of agreement and ceasefire, and if there's an escalation, then it's a long trade on oil. So it's one of the assets that is most likely to present a very nice return if you happen to get it right by simply following the progression between Israel and Iran. So US equities are really struggling. So opened with a gap to the lower side for the Dow Jones, immediately crossed the gap and moved higher. So from the 4-hour time frame, this is a market that is really recovering from the April to Liberation Day tariffs. So from the daily time frame, you can already see that after the big sell-off here, the market has made some significant recovery, but not yet to a level that you would say is 100% recovery. So in this case, after the big sell-off here on Friday, notice the strong red candlestick on Friday. Today, the market started with a gap towards the lower side, so indicating some form of exhaustion of the selling activity, and then immediately covered the gap, and now we are seeing bullish momentum. So clearly, since the US has confirmed that they are not joining the war with Iran, then good chance that the Dow continues with the recovery path and perhaps gets to this area around 42,562. So you look at the Nasdaq also doing the same thing after having crossed the weekend gap. We are seeing a strong acceleration, and of course, without expecting much of a volatility today being on a Monday, then the New York session high on Friday, which was marked at 21,837, could be the new target for today, which is Monday. So for SP 500, it's still the same thing, though you have to be a bit concerned on what's happening here. So if you look at this particular trend line here, so it shows that we don't have much room for acceleration. So perhaps a retest of this area. So given the strong bullish momentum, so perhaps just an extension to this area around 6,024. And of course, more volatility during the New York session. So Bitcoin, which happened to pull back strongly in the previous 2 weeks, we have seen some form of familiar pattern playing out here. And the familiar pattern here is this. Market basically moving in some form of sideways reaction, and then eventually making a break. So whenever you see this kind of pattern in Bitcoin, it's usually more of a consolidation and then breakout. And the breakout can be sometimes short, sometimes it can be extended. So a short breakout would likely hit this area here. An extended breakout would likely go for the previous resistance. So good chance that for now, the bullish momentum extends to 108,300. And if there's an extension, then we see 110,335 price action area. So New Zealand USD still on a very strong bullish momentum, but of course we can see key level resistance areas here. So the market might really struggle to break around that area here, but then still some short-run bullish momentum. And lastly, after we look at silver, we will also be looking at European equities. So silver happened to be one market that entered into a flag last week. So for those who don't know what a flag is, it's a chart pattern that happens especially after an almost vertical price action movement, and then you see the market doing this. So getting into some sideways or some form of pullback that is tight with reduced volatility, So basically the market just oscillating between those levels. So eventually there's a break. So this was a forced breakout that happened on Thursday. Friday we got back into pattern, and today being Monday, it's more likely that we eventually break out of that pattern. So the target is usually the top of the pattern. So if we happen to see more momentum coming into silver above the current price action area, then the nice target would be 36.88, which would be a 13-year high for silver price action. So for European equity indices, strong bullish momentum. So yes, last week we were mainly focused on short selling opportunities, but then we got to key level support and the market is making a very strong reversal. So for the German stock market index, we look at the base of the move. So the base of the bearish momentum here, and I want you to focus on this. It started right here and the market made this move here. So this was from midnight Thursday through to early morning Friday. And now we are seeing the market reversing back to mean, which implies that we are headed right back to where the move started. And that's around 23,775 for the German stock market index. So for the Spanish, the move started right here. You can see where the red candlestick starts. So clearly, very strong bullish momentum. So good chance that we see the market reversing back to mean by simply erasing the big sell-off, big panic sell-off that happened on Thursday midnight. So 14,105. Same case, in this case, for the French stock market index, it was a gap. So the closing price on Thursday and the opening price on Friday were not the same. The market didn't close the gap on Friday, and now the gap is being closed here. So we are going straight for 7,767. And notice that whenever the market closes a gap, especially one that is big as this one, then you might see the market hitting the area and immediately reversing as traders take profit. So Swiss stock market index are still really struggling with a big gap. So given their situation and they have a central bank interest rate decision coming up, then this might be one market that you might want to avoid for a while, unless there is a key level or a key change in monetary policy. So far, this is the summary. So it's a market that is, we can arguably say that this has been a range. So if you had to choose a direction for this market, since when? I would say since the 25th of April this year, I would say this is pretty much the direction for the Swiss stock market index. So unless something changes, we remain with that bias and then eventually wait for a clean direction, trading at either of the extremes, either the resistance or the support area. So for the Netherlands stock market index, still in a range. We just keep on extending this range. Attempts to break on both sides, which failed. So we are still on sideways momentum. And the Norway stock market index still pushing into new highs. So notice how the market opened with a gap, but it hasn't been closing these gaps. So yes, it closed this one on Thursday. On Friday, opened, just kept moving higher. This was on Wednesday, Thursday, and then Friday. And today we opened with an even higher price. So clearly, the gaps shouldn't matter much. It's more of a market that is getting more and more traction. So good chance that if you get a nice pullback, you can squeeze in even more bullish positions, given that this market has just been pushing higher and higher. So that being said, I believe that's the end of the session for today. Of course, we have the Euro stocks. So for the Euro stocks, remember the base of the move was the midnight move where it started on Thursday. So this is the base of the move. And now you're seeing the reversal, market getting back to mean. So target 5,365 price action area. And for Asian stocks, if you look at the Hang Seng 50 or the Hong Kong 50 cash index, clearly also the market is going for the base of the move. Base of the move was here. This is where the panic selling started, and now the market is pushing right back into it. So in this case, 24,208. Rastri China A50 cash index. So this was the beginning of the gap. Thursday around midnight. Here, this is where we saw the market moving all the way down, and now the market is making that impressive recovery, so potentially getting back to where the move started. So that's it for the day. I'll be checking on the questions. If there's any questions that I may not have answered, I will respond to them, and then we see what next. So I can see a comment that came in very early in the session. So apart from the war's upcoming rate decision, Mark Zuckerberg seems to be intending to go the AI way. How would this be critical to Meta as a company, and will it impact the markets? So I haven't paid keen attention to Meta, but any big tech company in the US is is guaranteed to be going the AI way. So we have seen Microsoft introducing AI to its products. Facebook or Meta is not very new to AI, has been adding its own AI to its products. So mostly, if you compare the big tech companies, including Google, Amazon, and all these other top companies, including Tesla, the one company that has benefited the most from AI products is Facebook. So despite not having a popular, I would say, large language model like ChatGPT or Gemini, Facebook has mostly been using AI to harmonize data in its platforms, be it Instagram, WhatsApp, be it Facebook itself. Mostly it has been using the AI in the background to improve its products, its delivery, and sell more ads. So this is not something that is very new to Facebook. But then if they are going for new AI products, perhaps that would add the value for the company, but I haven't particularly checked on how or exactly how much it would impact the stock. So a good question. Good morning. What does bullion mean, and how long will the safe haven keep pushing up amidst the Middle East crisis? So whenever we talk of gold bullion, we are basically talking about physical gold. So if you have ever seen a gold bar, then that is described as bullion. So what we trade on the FXPesa platform is called derivatives. So you're basically trading a derivative of gold, meaning that you are never getting delivery. Your goal is to make a profit from it. So whenever you hear of bullion, it's basically the physical gold. And that means we are looking at people, either individuals or central banks or financial institutions that buy the physical gold. Also miners and how much of the physical gold they are selling. And that kind of gives you an idea of the demand and supply equation for gold. So as for safe haven, I believe the safe haven play is still going on. It's only that at some point people are beginning to have a change in belief about the performance of gold and how it might end up at the end of the year. But then, given that we are seeing new uncertainties, there is a heightening of the war between Russia and Ukraine. Don't forget, it's still going on. And now a new war between Israel and Iran. That only raises the stakes and makes it even more undesirable to be doing business, given how Trump has not been straightforward with the tariff policies, making it very difficult for companies to perform at, I would say, at full gear. So in this kind of market environment where even the Fed is not cutting rates, then these fear and uncertainties keep on driving the bullish case for gold. So this is an account calling itself AI Music. Always a pleasure to be in these insightful sessions. Thank you. I appreciate you guys. So can BTC be described as a safe haven? Yes, it is a safe haven. It's a bit different from gold in that it tends to react more to global liquidity. So whenever you see, for instance, a strong rally in the NASDAQ and SP 500, most likely there will be a strong correlation with Bitcoin. So it's not as it's not having the same exact reaction you would expect to see in gold. However, long term, it's a much better safe haven asset compared to gold. So also somebody answered your question here. BTC is not a safe haven. It's a risk-on asset, meaning it correlates with indices and stocks. Yes, it does that. But then if you look at the performance of gold on the long run, let's say on a 10-year, 15, 16-year cycle, then you realize that BTC almost always outperforms gold. And this builds a different case on what a safe haven would be in terms of how much value you get to save in that period. So, good question. Will BTC go back to 11,000? Highly unlikely. I don't think BTC is ever going back to 11,000. And if you missed a zero and you're talking about 10,000, then that's more likely to happen in the near term. So that's it for the day. Also, if you haven't checked out the latest episode of the Bullish Banter podcast, make sure to check it out. It's out now. So in this case, we hosted a very interesting guest. His name is Stormzy. So we talked about wealth creation, investing in global assets, global stocks, the impact of AI. Why you see a lot of investors getting into the NSE, and the first thing they buy is the Safaricom shares, despite Safaricom shares not being the best in the market. So a lot of things were discussed in this session between myself, Jesse, and Stormzy. So if you haven't checked it out, make sure to check it out. I'll be sharing a link on the description here or on the comment section, so that if you haven't checked it out, make sure to go through it. Hopefully you get to gain some insights and of course understand some dynamics of the markets. Of course, it's quite entertaining. Hopefully you'll get to enjoy the episode. So of course, once you listen in, make sure to share your feedback, like and subscribe to the channel. Hopefully we get to provide more value. So other than that, thank you guys. Thank you for joining the session. Remember, if you haven't subscribed, subscribe to the channel so that you can get updates whenever we have a live session. And at the same time, if you're just a beginner in trading, check the links in the description below. This will help you register for an account. It's free of charge. And at the same time, if you're looking to learn how to trade Forex, we have a free course. It's available on FX Pesa YouTube. It's called the Novice to Pro series. And for Zoom sessions, you can always check the links on our bio. So from the link on our bio on Instagram, on Twitter, you'll get a link to our Zoom classes. And this will help you attend live free classes where you can raise questions directly and get responses, and you get to build that skill. So that's it for the day. Enjoy the rest of your trading day.